This is the Build Out West podcast with your host Tony Hyde from Evolution House and Lawn Specialists and Catherine Smith from Build Bright Builder Brokers.
If you guys are looking to build in WA or simply curious to see what's going on in building, you guys are in the right place. We're here to give insight with professionals in the game, coming to give the inside scoop. Episodes are uploaded weekly, so don't worry, we don't skip a beat and you won't either. Like, share, subscribe, sit back, relax, and let's go.
Hello and welcome to the Build Out West podcast with your host Tony Hyde and Catherine Smith. Hey, how are you?
Good morning, good morning.
And as you can see today, we've got another guest with us today, Jonni Chin from WestGen. Is that right?
WestGen.
WestGen Finance. Sorry, I should know that because it could be so often. Was Wealth the old one? Was Wealth the old one?
That's the old one, yeah.
We don't know it. WestGen. How are you, mate?
Very well. How you been again?
Good. Thanks for coming on. Really appreciate you coming on, and especially the topic I think is going to be unreal.
Yes, we're excited. We're going to do this episode basically on options for single parents, single mothers, single fathers, people with multiple dependents, some with one. We really just want to give people advice or options based on, their situation in becoming a single parent, whether they are either first home builders or they're looking at getting into the market post-divorce, and this could be a second or third home option for them as well.
Why me and Catherine know a little bit about this stuff, right? And again, a part of this podcast is to get the experts on. I work closely with Jonni quite a lot, and I know he knows this stuff really well, and that's why we brought him in. But before we go into it, why do we want Jonni on? Tell us a little bit about yourself, Jonni, and why you're here and why you're in the industry and stuff and all the good stuff.
Yeah, sure. So I've been doing mortgage broking for 12 years now. It's I'm just blessed with being in these industries because I get not only, you get to work with builders and being a part of the real estate market, but also you get to know people really well as well. And single parents has been a bit of a niche of mine lately. It's hard having kids, believe it or not. It is really hard. I mean, I've got an 8-month-old and she's tearing my head out. But as cute as she is, right? But I tell you what, I wouldn't change it for the world. And you put the same perspective on these people. Having two people to look after the child is a lot easier, but then if it's just one person, it's a very different story, and I can really appreciate the stuff they do. But lately, a couple of years ago, the government's come up with a scheme called the Family Home Guarantee. So that enables people to borrow, buy a house with just 2% deposit. Obviously, every state has their limits of the price you can go for. There's a lot of thresholds you need to meet as well, but it's actually a very good scheme that a lot of my clients have actually benefited from.
And that's what we really want to explore, especially around that single parent, divorcees, single dad who doesn't have the kids but pays CSA or child support and stuff like that, or the female, by the way. I say the male because CSA.
As long as they've got some sort of custody of the child, because it needs to be a legal guardian, but it doesn't mean. But this is expanded to not only single parents that have custody of the child. This also means for people who are legal guardians of a dependent. So if you're a legal guardian, then you qualify as well. So not a foster child, that's a different story. You don't qualify if you have a foster child, but you have to be a legal guardian. It needs to be a court-issued legal guardian statement you need to give as well.
All right. Okay. So delve into it. Tell us what it's all about. How does it? What is it in a nutshell?
Okay, cool. So just give you an example with people in WA. The threshold is $600,000. So 2% deposit is all you need to come up with. So whether you're buying an established house or you're building a house, and you're not only just limited to just the grant for the home guarantee, but you're also, if you're a first homeowner, you also qualify for the first homeowner's grant at the same time. Mm-hmm. So it's a very good scheme because if you're a single parent, saving money is pretty hard. So 2% does help a lot. And obviously, if there's stamp duty involved, if as a first time owner or not, obviously they apply. I've just recently had one who's not a first time owner, 2% deposit. He had 2 kids, which he had part custody of, earning good money. And he just needed to make the threshold of earning less than $125,000 before 2023. So we had to get the deal in before 2023 because his new income will put him over the threshold. So we worked really hard to make sure he got the deal done, and he was a very happy man at the end.
Right. What kind of things do so single parent, what kind of things do they need to have in place to to get a deal, to get a loan, right? So like they've got 2 kids, whatever. What kind of things do you need to look out for? Like, how do they get? Is it genuine savings? Can they use rent? Like, can they use any of the other stuff? Or how do they get a 2% deposit? Is there options around that?
Yeah, so it's very lender specific. There's only a handful of banks that do it. So let's say, for example, if genuine saving, if that lender offers that policy that you can use rent, your existing rent payments as a exception to use as genuine savings, then that should be fine. But generally speaking, 2% deposit usually is not really much of a problem for these people anyway.
Yep.
So let's say if they're going to build a house, it's going to take about 2-3 months before they get the building documents anyway. I'll just say if you had the money, just leave me your bank account.
And is that so? This 2%, obviously, this comes out and challenges the key start model as well, doesn't it? Goes up against that. So what's the kind of pros and cons of each?
Well, firstly,
pros and cons of this one against using key.
Yeah, well, Key Start has an income threshold as well, and this family home guarantee has income threshold of $125,000. So if you want to apply now, you need to get your tax return in, and you need to make sure that your taxable income on your notice of assessment needs to be under $125,000.
Yep.
Obviously, you can borrow a lot more because using bank's policy in comparison to Key Start, which I don't know exactly what the rate is now, but I heard it's pretty astronomically high, over 8%.
It's just dropped down, like literally just dropped down. It was 7.
Now, they actually have come to the table, which is exciting for people. Yeah, it's literally just been announced, but it's exciting that Keystart have come to the table, and I think they're trying to basically be a bit more competitive.
I think the tap's turned off for them. That's the thing. I think the tap's turned off for Keystart, going, well, we're not getting any deals in, and
because like they're to help people, helping people.
Correct. So they're pretty much matching most major banks in terms of sort of that mid 700s now. So,
well, in terms of what, with normal banks, obviously you can still borrow a little bit more because the interest rate will still be around the 6-inch range as well. So if you can qualify for the home guarantee, I think you much prefer to go for that.
Yeah.
Plus, like with a threshold of up to 600,000, I think you want to go.
So let's say someone was going to build a 550 package. Let's say 2%, you need 12,000, 13,000, something there, would you say? And then I think probably now is a good time because people are obviously getting their tax returns coming in. Let's say they get, say, $5,000 to $10,000 from that. They're already halfway there, right? Then you get the first home owner's grant, which is $10,000, which obviously will help towards sort of settlement and those bits and bobs as well.
Usually the $10,000 can't be used for what's paying all those fees, but usually it takes the price off. Let's say.
Yeah.
Adds 10% to that deposit, but you can't actually use that amount of soil, conveyancing fees and stuff like that.
Yes. Okay, cool.
Oh, good. I think what was a big thing about, I think one of the things we want to go into with this is around child support, because that has a massive impact on borrowing, right? People don't understand it if you're paying CSA, but also 2 things. Paying CSA impacts your borrowing, but receiving CSA will actually help your borrowing as well.
So CSA is
child support. Child support agency. It's generally when you've separate with your partner, you've got to pay some sort of money to help the ongoing care of your children.
Yeah, well, generally speaking, yes. As long as you can get a letter from the CSA saying that this is the child support you're going to receive, and as long as your child, as long as you're going to keep receiving for the next 5 years. So let's say, age 18 minus 3, if someone is about 13 or under, then you should be able to use it. Some banks are a bit different. I was looking on the Westpac yesterday. So child needs to be 11 or under before you can start using the child support income.
That right? Okay. So
some banks are very, they do take it in, but some banks don't even take it in.
But there are banks, so people are like, I get CSA. You can use it. It can be used as income because on top of their part-time and whatever else, it can be used as income to get you that loan that you might need. It might not be as high as you want, but it can be used to get you there, yeah?
Yeah, I just recently done one, and it literally tipped the deal over the line for them on. And she was a single lady with 2 kids as well, and she was...
Yeah, and again, what was the question I had there? It just went right in my head. It went right in my head.
Did it?
Question I had, yeah.
Child support. What about from... So the the perspective of the single parent paying the child support, how would that affect their borrowing capacity if they're not receiving but they're actually giving the child support?
It does affect their borrowing capacity. I mean, I've just had one right now. He's the kid's going to turn 18 in about 6 months' time, but he's still out of pocket about $90-100 every month. But the good thing for him is that he's got a big deposit, so it doesn't affect him that much. But in a lot of these instances, you either have to wait for the child support to drop off, or I don't know, like depending on like how their relationship with the ex-partner, say, look, can I give you this amount of money, stop the child support because I'm going to give you child support all up front and then just diminish the child support together. That's one option, but that's obviously the conversation he has with the ex. But you know, that's a very awkward conversation.
Yeah.
But no, if you're going to ask for upfront money, here's upfront money rather than pay your uptime. It's like, what will you say?
Yeah. Again, this is kind of go back to why us being brokers in the building game, and then obviously you being a broker in the finances. Why I think having a broker, even just talking to them about this stuff and knowing the right people to talk to, because there are loads of options out there that people don't even realize you can get around. There's millions of options, things like those kind of things to do what you just said there about paying up front or diminishing that. I mean, these are the things that people will understand. You go to a bank and say you can't borrow, but you're not looking at all the products out there, guys. Go out and explore, meet brokers, and meet and chat to them, and you get the advice you can from experts.
I think there's probably like two obstacles for single parents. One is saving the deposit, which is obviously, the low deposit options is obviously enticing, but it's also the borrowing capacity because, the amount of dependents you have and also the age of the dependents can actually affect your borrowing capacity. So a lot of the time the client actually might have a decent deposit, whether it's an inheritance or just genuine savings, what have you. But due to their actual income and the amount of dependents, that can really affect what they can actually receive. So what would you find in terms of someone having, say, 3 dependents compared to, say, 1?
Yeah, actually, I'm glad you asked that because I actually did research on that last night. Okay, so they give you an example on someone like $95,000 single, on a 30 years principal and interest. Let's say the living expenses on on the Henderson's index, so the minimum living expenses, and no debt, no HEX. Give you in perspective, they had 1 dependent. Their borrowing capacity is approximately 464. 2 dependents is 407. That's a $57,000.
Jesus.
Wow. Yeah. Okay.
If there's 3 dependents, 3 dependents, single person. Good luck to that person. I've got a lot of respect for that person. That's still a drop after that of $58,000 or 340.
Exactly.
You get into those numbers where it becomes really hard to do.
Yeah, and that's when you need to have that. That's when you need to have a much bigger deposit, obviously, because your borrowing capacity is affected so much.
Yeah.
What happens, in the cases where you are sort of more of a blended family, where you would have, say, 2 dependents, but you actually have other children living in the home? Would that affect it or not?
Other children.
Yeah, so let's say...
Kids from previous relationships come in, is that what you mean?
So technically, legally, you have 2 dependents that you pay for, but then your partner has children living in the home. Would that affect it, or would that be classified as a dependent?
Well, I think honestly, it's a case
by case. Yeah.
Depends really on, every situation is obviously unique. If that person has their own living expenses and they pay only for their children and the other partner pays only for their stuff, so it's up to them whether they kind of work on it. It's also for me to kind of judge whether they actually share their expenses. If they share expenses, then yes, the other 2 would definitely count on.
Yeah, okay.
However, if they're very strict, now this is mine, this is yours, then fair enough. It's a different household.
We've seen oh geez, did you hear that? Sorry. We've seen that the blended family I've seen quite a few times, and that can become really challenging. What's the options for like a single mum who may have a big deposit, right, but doesn't work and only CSA? Is there possibilities to do shoulder receive child support? Because I know it can be done. You got a lot. What I'm getting at is the divorcees who then get bought out of the house, or they get the money from the equity or whatever, they split it. And is there opportunities that they can't work because they've got 3 kids and whatever, or 2 kids? What options have they got there around that? Can they use CSA? Can that stuff be done to get you
banks
the line?
Yeah, I've had these scenarios come to me before, and to be honest, after researching, banks are very shaky on just relying on a single source of income, which is child support, because because that's something that she can't control sometimes, because the ex is going to pay that. What if the ex is like, oh no, I'm just going to,
Correct. Yeah, you do need to have some sort of employment. I find you need to have like a certain amount of hours, think about 25 or something like that, to even be considered. Even if you're having family tax A and B plus child support, it's always viewed differently to like a normal employment.
Yeah, I've had these strange ones. Got a referral from the ex-husband to say, oh, can you do my ex-wife's loan? So I said, look, okay, good, no worries. So I had a look at the CSA, and she sent me that old one. It was about 2 months old, and she was getting about $4,000 a month. But then I checked the new one, it's like $2,000. It's like, look, I've got to use the new one, because obviously, your ex-husband was going to pay it. No, why can't we use the old one? If I went to the bank, I could use the old one. It's like, well, I'm not gonna do it because, like, if I knowingly know that your income's gonna drop, that's just irresponsible. What if you default and everything else?
Mm-hmm.
That's fine. So she went off and said, oh, by the way, I got my loan approved by the bank, and it's a bit shame that you couldn't help it. To be honest, I got no regrets. It's because if I know that your income's gonna drop, that's putting you at risk.
And you guys are regulated as well. If they find out you've put in false information, that's your license gone and you're not doing it right.
Yeah.
So, kind of best case or worst case scenario. So say someone's listening to podcasts and going, "Oh, I'm a single parent. I've got 2 kids. I work." What things would you say, hey, before you come and even speak to one of us? What things should they get in order? Like, what paperwork should they get? What do they need to have so when they present it to you, 70 or 80% of the work's already done, or it's easy for you? What are the kind of top 3 things you want to get from them?
Definite income statements. Definitely CSA statement is definitely what I need to see.
Income statements, pay slips.
Pay slips, yes.
Yeah.
How many months of pay slips do we need? What's your preferred? Because I always try and get you like 6 weeks worth, so you can see the consistency. What's ideal for you?
Yeah, well, it depends which part of the year, but these days you ask, give me about a month's worth.
Yeah.
I can see where you're looking at. But if I need to go to the previous financial year stuff, I might ask for the last pay slip for the previous financial year.
Yep.
Then probably looking at everyday statements as well, see how you're spending and everything like that. You also need to check if you're getting child support stuff that they're actually being credited on time by the ex-partner as well. Any debt statement, just make sure that the conduct on the current debts are good, credit cards, loans and stuff like that.
And so they bring all that to you, and that's what you... So just to give a step ahead, because if you come and see us, I'm going to ask for all that stuff before we send you to... Before I not sit down with you, I'll happily sit down, but that's the stuff I'm going to need before I send you to Jonni or whoever we use.
Yeah.
Because we can't do anything, I've said it a million times in every podcast I've been on, your sales rep in your display house isn't a financial advisor. He doesn't know what you can borrow. He can maybe go roughly here, but it doesn't know if you've got car loans or you separated. But don't listen to what they say. Listen, but don't take it. Go away, come and see us, and go and see an actual bank account. I can't stress
saying that, I would actually say my advice to people is to be honest, because I'm sure both of you could say, how many times have you had discussions with people? You spend 2 hours, we're working on something for 600,000, and then they go, oh, by the way, bombshell, I've got a 60 grand car loan, I've got a whatever, I've got this, I've got, and you're just like, well, why didn't you tell me? I need to know these. If it's like, I'm not judging you. I actually genuinely need to know, because that's a totally different situation now.
Before I see any client now, I'm doing a credit check, doing a comprehensive check. Unless they send me and show me a bit of commitment these days that they want to go ahead with this, they have to send me something.
Correct, yeah.
Before I even see any client, I know what I'm working with. So at least when I go see the client, I'm not just data collecting. At least I'm just getting to the fun stuff.
Yeah.
Yeah.
I hear that,
Then I go through. When I talk to clients on the phone before I send them to Jonni, I'll phone you and say, "This is what I've got," and you'll go, "Yeah, okay, I'll give them a call, work it out." But sometimes you'll be like, "Hey, just get them to fill the form in, and I'll get that." We go on a case by case. Mm-hmm. If it's a very straightforward one, I just give you the paperwork and send it. But going back to that thing, when you want to see the bank statement, and say, "Oh, people don't understand it." See if you've got if you're on Sportsbet all the time and you're running your bank account down to like $100, that's not giving the banks any confidence, and you're spending things on Afterpay and Sportsbet and TAB, and you're lifting $350 every Friday night. You know what I'm talking about. Get that stuff out of your account. I know we're joking, but I'm dead serious. I've had a client who every time we come back from work, on a Friday night, we'd be drinking in the pub and $350. We know what he's buying, and the bank's like, "I know what you're doing. You're a high risk. We're not going to do it. You've got to get your your account's clean for 3 months. Not saying don't do it forever, but for 3 months, have a nice clean account. Get rid of the Uber Eats, get rid of the menu log, get rid of all of that stuff, and just live a bit lean for 3 months. Or don't drain your account. And if you're draining your account because you're on the pub, you're drinking, or you're gambling, you're going to get yourself in a bit of trouble with that stuff. Yeah,
I check those things thoroughly, because so I know what the kind of character they have. I had this one a few years ago. His wife and him and his kid came into the office and said, this is what the loan we're going to take, and but the wife had to go change the nappy and was out for 10 minutes, and he came to me and said, look, I've got a few personal loans, can you not tell my wife about it? I was like, well, how did you come out with this? And it was gambling problem. I was like, whoa, this is not real. So I told him, your wife's going to come back to his room now. I'm not going to do this deal for you unless you tell her the truth, and otherwise you can leave, because I am not dealing with this, because if you're going to lie to your wife, because this is not responsible.
Yeah.
You need to clear up your act right now. And, I put it on the spot. It's not really part of my job description, but he went away, told his wife, long story short, it was the best thing that ever happened to him. And he cleaned up his act. And right now he just does like an odd bet here and there, and he tells me on TAB, but all those big gambling stuff doesn't happen.
Yeah.
He's honest to his wife. Relationship's a lot better now. He bought a house a couple of months later after he cleaned up his act. He had to literally had to spend entire deposit clearing out all his loans.
Wow.
Yeah, and had to start over again.
But at least he did, right?
I was very happy for him.
Yeah.
And, because it was he was referred by his brother, who was actually quite a close client of mine as well. So I felt, okay, I better get this guy to sort his act out. And I promised not to tell his brother. I didn't tell his brother.
And that's like what we do as well. We'll sit here, and I've seen sales reps push deals through, and I'll sign here, going, you're going to cripple that client, or you're going to cripple the money. I won't. I just will not do it. I'd rather do it, guys. I don't think you're in a position to go to 98% loan with the money. I wouldn't do it. And again, that's why me and Kath partner with Jonni and these guys that have got a social compass about this stuff, like a moral compass. You can find the guys out there just sign up and do the deal, and that's fine. That I won't do it. I will not put you in a place where you're going to put yourself in a lot.
Like people go to like a display village and they're going, they get sold this dream. Oh yeah, I want this and this, and you get the bells and whistles and the rate ceilings and whatever. And I go, okay, technically, yeah, you can borrow $650,000, but you're going to spend X amount on your mortgage every week. Are you comfortable with that? And so many times people will be like, no. And I said, okay, let's start with that, because technically, yeah, I can do an 800-grand package for you, but is that working within your lifestyle? Are you comfortable with that? Because right now you're doing $500 a week in rent, but now we're going to be looking at $900 in mortgage repayments. That's a big jump. And whether you're comfortable with that is up to you, but like you got to be transparent in what they're actually.
You can tell as well when you're talking to them. You go, you'll need like $4 or $5 grand to pay for the deposits on the land, and they just go, I don't have that. And you go, you're not really in a position to start buying a house. Hey, there was one thing we've swept over, and it's my fault. I have to say that they are permanent residency. We know that now permanent residents are allowed on these schemes. They weren't before, right?
Yeah, from the 1st of July, they are allowing these schemes, and it opens a lot of places up.
Yeah, but the thing that got me, you were telling us before, is like it's, we've got the Kiwis that come over, and they come over like some sort of fee, but so it won't actually be open to all Kiwis if they're not on permanent residency. Is that correct?
Yeah, so for these schemes, when it comes to the first homeowners grant scheme, family guarantee scheme, where the government goes guarantor for you as a single parent, open to Kiwis as long as they have a permanent residency, like an official permanent residency. So you would know if you had it or not. But if you've just come off the plane and never applied for it, then you're not a permanent resident. You're just a New Zealand citizen. Yes, you are eligible for the first homeowners grant, but you're not eligible for the first home buyers scheme or the family home.
I think that's really important to know, because especially in Perth, there is a lot of Kiwis. And I've got a lot of Kiwi friends through the rugby league world I'm in. So yeah, I for me to know that, because I was like, no, you're not a permanent resident, you can't. Now I know that. That's like huge for us.
Yeah. So to wrap this up, we're going to do a little hot seat. Okay. So we've got some amazing questions. We never tell guests that we're doing this, so.
It's fun. Hey, Jenny.
So let's later. Okay. Don't worry. They're not too scary. Eagles or Dockers?
Dockers.
Okay. Oh, that was very quick. That was hot.
Look at Colin. He's dressing because he's Dockers. He's always purple there.
Really?
And, well, to be fair, Eagles
Controversial.
just won on the weekend, which was
That's
controversial.
It's just North Melbourne.
Okay, yeah. Look, I'm a DOCA too, so don't worry, I'm a DOCA member. But DOCA's won as well, so we're happy with that.
Geelong.
That was
In Melbourne. Yeah, that's a lot better than
that's a commitment.
Melbourne. Yeah, that's
We'll take that. Okay, are you a north or south of the river guy?
south.
Oh, southy.
honestly.
A lot of southies, nice. Rottnest or Dunsborough? Dunsborough.
Why? I'm a Dunsborough person, but why? Why would you go down there?
To be honest, like I'm an easygoing fella. I could have gone 50-50, but my wife would have chosen Dunsborough. And if I wanted to go enjoy a place, my wife needs to enjoy it too. Because my wife's not enjoying it, I'm not enjoying it.
Happy wife, happy life.
Oh, I know that one. What suburb would you invest in right now?
That's a very good question, actually. To be honest, I would say
Treeby. Yep.
maybe south of the river, Treeby for sure. Madura Bay. If you're looking up north, I'm probably looking at about Yanchep. Alkimos is already kind of getting there, but still got a lot of room to grow, in my opinion.
Mm-hmm.
Banksy Grove.
Yeah.
Honestly.
Isaac was so popular.
Yeah.
Hard to get spots there now, you know. Even like Treeby and like Madura Bay, like they're always hot inquiries. I would say for both of us, always, you know.
It's not as cheap as
Treeby's so ideal because you're just off the freeway there, you know, with Coburn Station. It's just going to go even more.
See down Medora Bay, Lake Lindsay, see the down there is huge.
Yeah, but you also get decent block sizes there in Medora Bay, you know.
Actually, but let me go back on that. What's a suburb just after Mandurah? That's
Sawyerville?
Dawesville. Yes.
Yeah.
100%. I was
Falcon, Boulevard, they're all hot topics.
Yeah.
I was just seeing a client there a couple of weeks ago. I'm going to see them again this week. And just driving in Dawesville made me feel like I was down south.
Yeah.
It's just beautiful.
And it's not far. It's like 50
As
minutes.
soon as you get past Mandurah and you get to that wee point as it comes down, you're like, you just did it just as you cross over the bridge sort of thing. You're like,
Yeah.
you feel like you're in the country and I feel like I'm like, I can almost smell the red wine.
It's just stunning down there.
Yeah. And it's also because you're between the beach and river, Dawesville, so you kind of have best of both
And
worlds.
with the Forest Highway joining Quirana, it's not. I've got mates now that live, because I live down South Folk anyway. They travel to Bunbury every day now, an hour and 5 minutes. It's like, Tony, there's like no traffic. It's brilliant. And they're like, still living it. So yeah. Anyway,
It's
questions.
And last question. If you were going to build a house right now, which builder would you choose? I know. No one likes that question, but we like it.
There's a correct answer. It's not. Well, there is.
based on what I've been told, and what people I've been dealing with and stuff like that, and the reputation, Ford Building, made by this guy called Matt Ford. I used to work with him when I was at one of residential, the general manager there.
Yeah.
Top bloke, absolute top bloke, and he's running the business with his wife, Cara. Just the quality of the homes I've been told by people, and the communication with them has just been swell, and they work really closely with trades, and yeah, just and they pick and choose their work as well.
Beautiful.
Yeah, and that's what they do is, I know some builders, they just take anything. I know one builder right now, I know a couple courts right now,
Yeah,
because they're just taking everything.
we won't name names in the show. We won't keep ourselves alive.
No, definitely not. But yeah, Ford Building,
Ford or Fort?
Ford, Ford,
Cool.
Matt Ford, that's his name. 100%, like, he'll be the person I'll build with.
Good.
Oh,
Support the small builders. It's good.
That will can.
All the time.
Mate, absolutely brilliant to have you on. Thanks for going through that, because it's a real niche kind of sticky topic with a lot of little interests. And again, really summarising on it, there's so many different parts. The best thing to do is, if you're in that situation, reach out to us.
Yeah.
We'll go through it, because it is, I mean, we've spoken it, we're jumping around. There's that many different things that impacts it, guys. We just try to give you a bit of information that you go, hold on, there is. It's more just a case of, look, I earn enough, this actually might work for me. I didn't know about this. Come and see us, and we'll help
Yeah.
you through it and see. We'll never say you can do. We'll say you need to give this to get there.
So if you are a single parent listening or watching, just send us a DM or a message, and then go through your situation, and then basically we'll guide you through there and see what options you have.
And me, Catherine, or Leslie will get back to you straight away. Leslie's our PA, and we're in touch with one of us, and we'll get through. And again, if it's that success, then that you'll meet Jonni as well, and he'll help you through it all. So again, thanks very much for coming in, mate. I really appreciate it.
It was an absolute pleasure being here, and thanks for putting me on the spot.
Thanks. So that's us for today, guys. Thanks very much. As always, like, share, follow, subscribe, all the good stuff, and we'll see you next week. Bye.
Bye.
Okay. Thank you.